Simple. Today is the final webinar of our Sector September series. Throughout this month, we've gotten to share a lot of amazing information about our new Sector Explorer tool, talking a little bit more about some of the tools we've had access to, such as swing trade setups, and ways that we can use those tools to help find swing trading opportunities in the market. While all of us love long-term trading, it's not the exciting part of investing, okay? It's the thing that you know you should do and you have to do. And having the right set of tools and strategies to do that makes it easy. But at the same time, once we've had all that set up, it's fun to get involved in the market and actively trade. So today, we're going to continue that conversation. This was a topic that came up in our Thursday Spanish webinar, where we were talking about how to use information that you find on Sectors Made Simple to swing trade. And the topic of TradingView came up in that conversation. And I felt like this is an amazing topic for us to be able to discuss and really put pen to paper together with. Because at the end of the day, I can show you how to find leading companies, but what do you do with that information? Today, I'm going to show you. I'm going to show you how we can take information that we find using Sectors Made Simple and then actually trade it, doing swing trades in a way that is both understandable, but also very, very observable. If anyone has been around Sectors Made Simple for a long time, you know two things. One, Jonathan's a little risk averse, but two, I absolutely love making informed investment decisions. That's why we create all the tools that we offer, but also that's why when I talk about trading strategies, I always try and bring it back to what has the past shown. This leads pretty well into our disclaimer, which is, unfortunately, past results cannot guarantee future performance. If it could, well, everyone with the right tools or algorithms would be a millionaire. Predicting the stock market or using a trading strategy is not a magic ball or magic crystal ball that gives us all the answers, but by understanding what has happened in the past, we can try and improve our chances in the future, always understanding that past results can't guarantee future performance. That's why when I'm going to share today's information, I will encourage you to do your own research, to change some of these numbers yourself, and find the strategy that makes the most sense to you. And from there, the science unfortunately ends and the art begins. It's up to you to take what you learn, run with it, and find your perfect trading strategy with it. So, let's dive in. Today's topic is talking about the platform TradingView and how we can use information that we find from Sectors Made Simple, notably swing trade setups, to do this. So, we're going to talk a little bit about what TradingView is, in case you're not familiar, what RSI is. No, it's not a hand injury you get from spending too much time on the computer. What STC is, why these two indicators are valuable, and how they work as part of the strategy that we'll look at. And then we'll dive into the real meat and potatoes of the webinar, which is using them. Using RSI and STC to actually create a backtest for a trading strategy and ultimately find a trading strategy that we could use. And then finally, I'll show you how to get access to the indicators that we'll use in today's webinar. So let's start off with the big overarching question. Why does all of this even matter? Why is this a topic that we're even talking about? Well, I kind of hinted at it before, but in many of our Sector September webinars, we've discussed ways to find companies using swing trade setups, using the Sector Explorer to find companies who have the potential for profits. But the thing is, we've left it at saying, and here's our watch list of companies. Great. For some people, that's all the information that they might need. They've already got a strategy that they're using. They know what to do once they find these opportunities. All they wanted was more information on how to find those opportunities. And if that's you, awesome. I hope you're enjoying the tool and finding a lot of value in it. If you want a little bit more, you want part 2, you're ready for the sequel, today's the sequel. So we're going to be talking about using TradingView to accomplish this goal, to find swing trade opportunities, and not just find the opportunities, use a strategy that will help us to understand when the right time to buy might be. So, just a quick review in case you're not familiar with what TradingView is. It's a charting website that lets us see stock charts for different companies. It does not really give us point and figure. Can you do point and figure with it? Yes. Do I suggest it? No. I'll go as far to say I don't recommend it. It's not pretty. There are better places to find point and figure. But TradingView does offer really good time series charts, meaning take the stock price at a set period of time, every day, every hour, every minute, every second if you're really crazy, and use a more traditional type of stock chart to do this, such as candlestick. But the beauty of TradingView is that it's not just a stock chart. We can also add indicators to this chart. Indicators is a fairly broad category or group of things that we can add on to the price of the stock. Some simple examples would include volume, how many shares of that stock have been traded over that period of time, or moving average. What is the average price over the past 5 periods? But the really fun part is that if you're good with computers or you're smart enough to use ChatGPT to write code, vibe coding is totally a thing. You can do it. Awesome. I've tried it, and it's a lot of spaghetti. Let's just put it like that. But if you're good at vibe coding, you can do that as well. But all of that comes together to say you can also create and code custom indicators, custom strategies within TradingView. And about 2 years ago, we did an Analysis Academy class series. That class series was all about day trading options. And we showed off different strategies within TradingView that we could use to day trade. If you already own that class series, awesome. If you don't own that class series, you can go ahead and purchase it under learn.sectorsmadesimple.com in series. One of the series here is going to be Analysis Academy. You can purchase access to the class series, get access to all the indicators and strategies we taught, and learn a little bit more detail about how these strategies work, the pieces of information that are used to build them, and a lot more. So if you're looking for a deep dive into what we're covering today, that's going to be the place you'll find it. The class series is available for purchase regardless of if you have a subscription or not. I'll post the link in the chat right now. But if you do have an annual subscription to Sectors Made Simple, you get a 50% discount on that class. Now, I will also say that today, for Sectors Made Simple subscribers, I will share the indicators with you all. So if all you're interested in is what you learn and what you see today, you will be able to get access to the 2 indicators we'll cover today. If you want all the other strategies, I do recommend checking out that series. The strategy we're going to cover today uses RSI and STC to do so. The goal of this strategy is a little, I'm not going to say that it's very straightforward, because it uses 2 indicators that you might not be familiar with. But the slide's out of order. So before we get into the actual indicators, let's just talk about what this strategy is trying to do. What is its goal? And then how do we help accomplish that goal with indicators? So this strategy is one that can be used for both long positions and short positions. If those terms are new to you, long means you buy it with the hope it goes up. This could be buying the stock itself or buying call options. On the other side of things, we have short positions, where you are either shorting the stock, which is very uncommon, or you're buying put options, a little bit more common. This strategy does have a version for both long and short positions, but we're only going to look at the long positions today. If you want the short positions, go check out Analysis Academy. The reason is that I want today to focus a little bit more on swing trading, not exactly day trading. And typically, swing traders are buying and holding the stock itself. They're not looking at options. They're not looking at short positions. They're just saying, buy it, hold it for a period of time, sell it if it goes up a certain amount or goes down a certain amount. That's what the strategy is going to be for today. The strategy works in two parts, and it's kind of like starting a race. Before the race begins, the person says, on your marks, get set, and then go. We're going to take out the get set part because there's two things we're looking at. The first is the on your marks. When do we start to pay closer attention to that stock? This, for our strategy, is we want to find a company that's oversold. That means that this company is currently undervalued or is considered to be undervalued because of some bad days that it's had recently, or some bad periods. It might not even be days. But the hope is that if it's going down, it will bounce and go back up. The indicator we'll use to do this is called Relative Strength Index, or RSI. This will be our on your marks indicator. Our go signal is going to be that we buy it when the momentum starts to pick back up in the positive direction. So we're starting to see the moving average begin to go back up. And the indicator we'll use for that is called the Schaff Trend Cycle, STC. So two different parts. The get ready, which is going to be our RSI, and our go, which is going to be STC. Let's dive into these two ideas a little bit more so you get a better understanding of what these numbers are. We're going to avoid the calculation side of things because ultimately you probably don't care, and I don't blame you. We want to learn what these numbers are doing and why, not how to calculate them ourselves, because ultimately the calculations for them are pretty ugly. And it doesn't really help us to understand how we can use them. So let's focus more on what this is telling us and how we can use it. Starting off, let's look at RSI, which stands for Relative Strength Index. This is on a scale of 0 to 100%. And what it does is it looks at a window of time. The reason I say window is because it looks at 14 periods. That's the standard, is an RSI 14. And you'll notice periods. Why isn't he saying days? Why isn't he saying weeks? Well, because it depends. A period can be anything. Period can be 1 day, can be 4 hours, can be 1 hour, it could be 5 minutes. RSI does not care. All RSI cares about is that at the same interval of time, every 5 minutes you check the price. That's all it cares about. So it looks at a window of time, traditionally 14 periods, 14 days, 14 1-hour marks, whatever it might be. We look at those 14 days and we find the average gain if the market went up or the price went up, and the average loss if it went down. And we turn those two numbers through a bunch of ugly math into a percentage. The goal of that percent, or how we can read it, is that the lower percent we have, the more oversold that security is. This might seem very similar. A scale of 0 to 100%, where lower number means oversold. And if it seems familiar, you would be right, because it's calculated, or we can read it very similarly to how we would read bullish percent index, or BPI. They're both on a scale of 0 to 100%, where anything below 30% we consider to be an oversold thing, and that means that we can see it as having a higher chance of opportunity. If there is a lot more room for a price to grow, that means there's more area of opportunity before someone might say, I think we might have taken things a little bit too far. For example, if we go in and we look at two different companies, by the way, audience participation time, bet you weren't expecting that. Let's go in here really quick and play a quick game. Let's go here and let's look at NVIDIA. Here's its stock price. Here's its chart. And if we look down here, its RSI of 14 is 63. It's very difficult for us to sit here and say, is NVIDIA undervalued? Do we think that it's what it should be worth is higher than $186? I don't know. Let's compare that really quickly to a company like Intel. Intel's RSI is 70. Why? Because its price just shot up due to the deal that they made where the Trump administration bought part ownership in in Intel. Also, Intel just made a deal with NVIDIA. So this one is saying it's even more overbought. And if you notice, the number is in red because it's above that 70% line. For contrast, let's try AMD, where we find an RSI of 51%. So RSI can be a good way for us to try and get an idea of if the price might be overbought or oversold. So anything below 30% is considered oversold and can have a higher chance of opportunity. Anything overbought, 70% or higher, and is seen as having a higher level of risk. Now, this is the basics of RSI. So if you see it out in the wild, you know what it is. We're now going to massage it a little bit to do what we need it to do. We're going to take things to a much more extreme level. Because when it comes to swing trading, I don't care about its 14-day performance. I care about its performance right now. So to make it a little bit more reactive, instead of RSI of 14, we're going to find the RSI of 2. This means we will have larger changes, and those changes will happen a lot faster. So instead of seeing an RSI of 70 as being very oversold, being overbought, we might push that up because 70 could happen in a day or two. So what we're mostly interested in, though, is the other side. If we're buying long, if we want to buy where we want profit by the stock's price going up, we're not interested in overbought. We're interested in where there's room for growth, oversold. But I don't want to use 30%. If I'm using an RSI of 2 because I want this thing to dance, I want it to dance. So instead of 30%, I'm going to use 10%. So now we are using an RSI of 2 periods of 10% or lower. That is our get ready signal. It might seem extreme, but when we go and look at a chart of it, you'll notice that this is something that is not very uncommon. This happens quite a bit, and it gives us a better entry point for when we might want to say go. For the go signal, we're going to use STC. STC stands for Schaff Trend Cycle. It is based on, and it's a variation on MACD, if you're familiar with MACD, which is moving average convergence divergence. Fancy words to say, how are the moving averages, the average price in the past doing? Is short-term doing better than long-term? Is long-term doing better than short-term? The goal there is just to try and smooth out stock prices a little bit. Stock prices, when you look at it, will look very, very, very jagged. What we're trying to do is just smooth it out a little bit, round things out so that the numbers are a little bit more friendly to use. STC is also set on a scale from 0 to 100. But unlike RSI, that spends most of its time somewhere in between 90 and, well, for RSI of 2, somewhere between 90 and 10, STC loves to live on the edge. It is usually very close to 100, like 99 or higher, or very close to 0, below 1. And what we care about is not when it's at 100 or when it's at 0. What we want to see is when the number starts to go up. Because when it starts to go up, it goes up quick. So what we really want is we want to find when the STC starts to go up from around 0. This seems like a lot because they're brand new ideas. We're talking about a trading platform you might not have used before, or a charting platform you might not have used, crazy indicators that I'm hand waving the calculations, because ultimately what we really care about and where we can really start our conversation is how we put them together. Because once we understand why we're using these numbers, I want to find something that's oversold, meaning that its price probably is ticking downward right now, but I want to buy it when it starts to go back up. That's really all the strategy is doing. It's starting to go down or it's oversold, RSI. The moment it goes back up, we want that immediate reaction. That's STC. So our on your marks is going to be the RSI2 goes below 10%. It doesn't matter if it goes back up above 10%. It just matters that it went below 10%. That's our on your marks indicator. And the go for the strategy would be the STC begins to go up. On the indicators we'll look at, we make this pretty easy. The line will turn green. The STC line will be a bunch of greens and then reds and then greens and then reds. What we want is when the line goes from red to green. Now this strategy is, whoa, that was a lot of text. This strategy is great for a few different reasons. These are my opinions of this strategy. The first is that the strategy is fractal. Fancy word for saying we can use whatever period we want. We can set our bar size or the period to 1 minute, to 5 minutes, to 1 hour, to 4 hours, to 1 day, to 1 week, and still use the same strategy. The other one, and my personal favorite, we can backtest it. Because the strategy has simple rules that it follows, we can go in and backtest the strategy and see how well it would have done. For every one of the trades it would have made, we can go in and say, how did you do? Do I like the results? Was it profitable? But more than that, we get a lot of information. We get to know, has the strategy been profitable? What percent of the time? What was its average win? What was its average loss? And in my opinion, the most interesting thing for swing traders, how long am I stuck waiting for the results? That one to me is very, very important to know. Because if we are buying a stock because we want its price to do something, that now means that I'm invested in Juan de los Palotes Incorporated. If my money is in Juan de los Palotes Incorporated for a week, I can deal with that. But if I'm holding that stock for 2 months, hoping that it's doing something, that's 2 months that money could have been put in another investment that actually did move. So knowing or having an idea of the average time of a swing trade can be very helpful in letting us know, does this strategy meet our time horizon or not? For some traders, they might want something where the average hold is 4 days. Other people, they might not want 4 days. They might want a week or two. There's no perfect number, but knowing what the answer is for the backtest can be very, very valuable. The next point is one that matters mostly if you're familiar with TradingView, which is all of the indicators are built into one. RSI, STC, you don't need 2 different charts and to start crossing your eyes to try and see them both. Also, TradingView is a free platform that has a lot of paid options. Some of those paid options, in my opinion, are very valuable. But if we're just interested in exploring these strategies for the first time, or if we don't want to buy a subscription to TradingView, by combining these, we help to make it easier to use the strategy with a free account on TradingView. And then the last one, alerts. It's really fun to know what a strategy is and to sit there and wait for the strategy to do something. But we all have lives. And sometimes, especially for swing trading, if we're trading options or day trading, it's a lot easier to say, I'm going to sit there and watch the stock price because I know when I want to buy. If we're trying to swing trade and we want to just buy something and then hold it for a few days, it's really nice to just be able to set an alert for it and then get notified when that signal is hit. So we have another indicator that is this is now on a signal indicator. I feel like all of this is a little tricky to follow without actually getting to see it. So let's see it. Sorry about that. Let's actually see this in action. So if we head on over to TradingView here, I can show you what we are looking at. So if you've never been to TradingView before, you're probably going to end up on a page that looks like this. No, you didn't end up on NASA or SpaceX's website. You go here to Products, Supercharts. And then this will open up your chart viewer. Here we can search for any company that we're interested in. It could be stocks, it could be funds, it could be currency, it could even be crypto. But for our interests, we're going to focus mostly on stocks. So I'm going to quickly hide these indicators so we're all just looking at the same thing. What we can see here is the price over time. We have August 25th, we have August 2025. So the 1st, the 4th, the 5th, 6th, so on. You can make the dates bigger or smaller by dragging the bottom, bigger or smaller prices by dragging on the right. The important things for us, this 4H to the right of the search. This sets our bar length. our period. So for example, right now I'm using 4-hour bars, meaning every one of these little boxes, these candles, is 4 hours of price. So we have 4 hours here, 4 hours there, 4 hours here, 4 hours there, and so on. I can change this from 4 hours to 1 day. I can also change this to 5 minutes. Obviously, when you're starting to look at a shorter period of time, price isn't going to move as fast. So here what we're seeing is the price change every 5 minutes in the market. And we can add a very basic indicator that people will be familiar with, like simple moving average. What we can see is the simple moving average of 9, meaning 9 periods. The past 9 of these candles, what is the average? If we're using 5-minute bars, this average is going to be over the last 5 minutes, so the last 45 minutes. If I set this to an hour, the moving average is now over the past 9 hours. We did it to days, it's now over the past 9 days. This is an example of an indicator that is fractal. It will change depending on how long of a bar or a period we're using. If we're using a 1-day period, it will give us 1 day, or it will give us the moving average of 9 1-day periods. If we set it to 5 minutes, it will give us the moving average of the last 9 sets of 5 minutes. And our RSI STC strategy works the same way. Whatever period we set up here in the top left is the period RSI STC will use. Now, let's go in here and let's open up the RSI STC indicator together. What that will do is it will create these different, let's put on the combined plot. Reason, I want to be able to see this strategy for real. What we get here is, if I remove simple moving average, is a crazy looking graph. We're looking here at this section below the prices. And you'll notice a couple of different lines. We have a dotted line at the bottom. That's our line for 10%. So if it goes below that dotted line, that's below 10%. If it goes above the blue line, that's above 90%. The black line that we see, that's our RSI. And if you'll notice, it bounces up and down a lot. We're using 1-hour bars here. From Tuesday the 23rd at 11:30, by 12:30, it went from 0.55 to 56 to 54. Then the next day it went from 22.6 to 4.5 to 33.18 to 14.65. You get the idea. It changes a lot. And that's the point. We want that indicator to change frequently. But if you'll notice, it doesn't just go 100, 0, 100, 0, 100, 0. It spends a lot of time somewhere in the middle. Also, the translation for that is hilarious. So really, the RSI is just the black line, and what we care about are moments where the RSI dips below 10. When that happens, that is our on your mark point. Then we wait until the STC, which is the red line, turns green. And you'll notice from September, it started off at 99.99 on September 23rd at 6:30 in the morning. And by the very next morning, 6:30 on Wednesday, the 24th, it had gone from 99.99 to 2.53. Then it dipped down to 0.07, got down as low as it actually went to 0.0000 before it started shooting right back up, close to almost 100. So two different indicators. RSI, which is going to bounce up and down a lot, but it's not going to swing from 0 to 100 to 0. STC will not swing as much, but when it moves, it will typically go big. It will go up to 100, down to 0, up to 100, down to 0. Yes, there will be some small changes, but for the most part, it will be these massive, massive swings. And you'll notice that often we see the trends kind of overlapping. We see the RSI dip below 10, and then pretty soon after, it goes up. We see the RSI crash. Here, it crashed and we had a little bit of movement, but here, when it really collapsed, the STC followed soon after. So these two indicators are both looking at price, and they're both trying to help us to see when the price is moving enough to say this matters. RSI is going to bounce around a lot more, which is why it's our on your mark point. And then the actual things are moving is going to be the STC turning green. This indicator is one that allows us to follow this strategy manually ourselves. Now, what I want to also share with you, though, is the other side of it, which is the back test. This strategy we can do manually, but I want to have some results. I want to know how good is this strategy at trading. Obviously, if I'm interested in following a strategy, I want to see some results. Does that mean it's going to do the same thing in the future? Unfortunately not, but it gives us an idea of what we could expect. So for example, here we see that this strategy traded fairly frequently. It did 169 trades, 50% of them were profitable, and for every $1 it risked, it gained $1.25. Don't worry too much about the total profit loss here. The reason it says that is because it's not investing with 100% of what it can do. But these ones are. So underperformance, we can get some actual numbers for this strategy. So what we can see is that its average gain when it won was 0.87%. Its average loss, 0.69%. The important thing about this is that it tells us an idea of what is the average trade going to be. If we're using 1 hour bars, we're seeing that the average trade is only 87 cents, which, is interesting. But the reason that it's only that is because if we go to trades analysis, the average number of bars in trade is 4, meaning we're using 1 hour bars and the average trade is 4 bars, meaning on average, you are buying and selling within 4 hours. That's not really enough time for the stock to actually move. But you're trading options and all of those gains and losses were leveraged. Now we're talking some bigger numbers, right? Because if we're looking at options, this is the price change of the underlying security, not the option. But what we know is that this strategy was profitable 50% of the time and made more profit than it lost. That is valuable information to have. Now, let's try 1 day. Check this out. The same exact strategy. If we go from 1 hour to 1 day bars, now we're looking at 72% profitable. For every dollar we risked, we gained $2, or sorry, our return was $2.11. Our average profit, again, these numbers are a little wonky because of how the strategy is actually trading. But the important part of this is the fact that this strategy won 18 trades, only lost 1, and the average gain was 1.3%, average loss 1.6%, which again, when you're winning 72% of the time, is going to result in a profit. And the average bars in trade here is 3 to 4. 3 to 4 bars now is 3 to 4 days. Does this mean that 72% of the time this is going to be profitable in the future? Unfortunately, no. Past results can't guarantee future performance. But does this mean that we have some information to understand how often this thing's going to trade, how long it's going to hold, and also how well it would do, or how well it has done? 100%. And that information alone is more valuable than just seeing someone say a strategy on the internet and hoping that it works for whatever stock you're doing or for whatever strategy you're doing. Personally, I don't trade options. I have a deep understanding of stock analysis, of trading strategies for options. Personally, it's more risk to return than I'm willing to take on. I paper trade them, but I don't throw actual money in options. So for me, a 1 day strategy, much more my style. For others, 5 minute might be their thing, because if they're looking at options, they care about those 1 minute trades. So there is no perfect solution that fits everyone's need. For day traders looking at options, 5 minute bars might be their thing. For more active swing traders, 1 hour, but still that's day trader territory. 4 hours or 1 day, we're getting into actual swing trade levels. So that's really the idea of this strategy. Can we follow it ourselves? 100%. Can we use that combined indicator to follow it ourselves? You bet. Can we backtest to see how well the strategy would have done? Oh yeah. But here's the other cool part. The other indicator that we will provide is the actual indicator itself. If it is buying something, it sets itself to 1. If it is not buying something, it's 0. Why that matters is this. We can go in here and we can set an alert. So if we select our RSI STC long indicator, click the dots, add alert. I can set up an alert to tell me when this chart goes from 0 to 1. So by doing that, what I'm able to do, so we can go here and we can tell it, set it to when it turns to 1. And by doing that, what we have done is we have now set an alert. So we get notified via app, email. If you have the program open, you can have it send or play a sound. If you're really techie, you can have it send a Discord message or post something to a website. Whatever it is, we have the ability to set a notification for it, making it a lot easier to add these things to a watch list. So we're not staring at this one chart hoping it does something. The reason, if we're only looking at one stock, we're probably going to be sitting here a long time. Let me show you. If we used, let's go back to 1 day bars. If we used 1 day bars, we traded 25 times. Pretty good, right? One strategy, I could use it 25 times. The problem is, the most recent time the strategy would have traded was August 29th. And the first time this thing traded was 2023. So from 2023 to the beginning of September, this strategy traded 25 times. If what we're looking at is options, something that uses 1 hour bars maybe, we're looking at 169 trades since 2023. In September, we would have had 1, 2, 3, 4. 4 buys, 4 sells in September. If we were trading 1 day bars, we're probably going to be sitting around a lot longer. Which is why it's very important whenever we're looking at a trading strategy to not only know when to buy and why we buy, but also what to look at in the first place. And that's where a tool like swing trade setups can come in. You don't need to just guess and check on companies. We can use swing trade setups to do this. The beauty of this tool is that the data updates every day and is constantly helping us to find new companies whose prices are close to breakouts or are reversing off of support. We can filter for various things such as market structure and, more importantly, sector. I'm going to share with you 2 different setups for swing trade setups. The first one, filter by top sector. Here, we're going to find a sector that is currently moving up. Why? 50% or more of a stock's movement is due to its sector, not the company. So if we find an oversold company in a positive sector, the hope is that that company is eventually going to get nudged in the right direction. All we're trying to do here, because we can't guarantee future results, is increase the chances that it's going to continue to go up over time. If we're options trading, if we're trading with 5-minute bars, we're not as worried because price movement's always going to happen on that shorter time frame. If we're holding a stock for a few days, I want a little bit more confidence that the stock's price is going to go up, and I'm going to use as much information as I can to do that. So here's that information. I want it to be in a top sector. I want it to be close to or going on a breakout. I want its price to be going up, of course. And I want that signal to be a breakout. Breakout means that it is creating new highs. The price is always going to have little dips along the way, but it is going up over time, and it is creating new highs, not new lows. This will find us companies who are close to breaking out and can be a good place to start. The reason I say good place is because this is one that we've covered in past webinars, and it's the one that most people are probably going to be familiar with. Personally, easiest way to find the leading sector is to use the momentum on the matrix. I might look at previous day. 2 is a little bit smaller than I might like. 4, okay, I can do that. So in this case, I would pick XLU or the utilities sector. Setup type. I want potential breakouts. Companies approaching their level of resistance. Direction, up. Signal, breakout, because I want them to be creating new highs. And now we get a list of 12 companies. Now we get into a little bit less of the science and more of the art. We can click on the ticker symbol and see the chart for many of these companies. Check this out. If you want a great example of why support and resistance is valuable, the price tried to create a new high 3 times in April and May and failed to do that, and then broke support. It then broke out and created a high and is now testing that high once again. This to me is a pretty interesting stock. Cool. Let's plug it in. Let's take that company and see if we backtest it. And what we notice, 1-day bars don't really look that good. But that's why these strategies are fractal. We can test different periods because every company is going to be a little bit different. If we change it to 4-hour bars, all of a sudden, we see that some of that loss from the strategy before was probably due to its 2023 performance. But since then, the strategy has been fairly successful. Overall, it's 53% profitable, profiting more than it's losing. And here's the cool thing. Trades analysis, average win bigger than the average loss, and the average bars in trade are 3. Meaning, on average, it's holding 1.5 days. That's fairly active. We can test 1-hour bars if we wanted. We can test 1 day. We already did that. We didn't like the results, but that's only one company. We can then go back to the dashboard, check out another company. I don't really like this chart. The reason, 6 means these are price changes from June. There was 1. 7, July, nothing in August, something in September. If I were to put a guess here, if we look up this ticker, there's not going to be a lot of recent trades. So what was it? It was BL or BIP? BIP. Okay, mixed results. Again, been decent in the past year or so. We go in here, trades analysis. What we'll notice, the average hold is 4, so 2 days. And it's traded once in September, a couple times in August, and then nothing in July. 1 in June, 1 in May. Not really active enough. Cool. Let's keep going. We can check all of these individual companies and see if we like their chart in the first place. And then if we like the chart, we go and plug them in to our strategy, and we see, does the strategy make sense? This one, not really great on the 4-hour, not really great on the 4-day. Does that mean that this company is a bad company? No. But what it means is that the trends aren't as predictable. And that can happen. Not every company is going to make sense for every strategy. But the beautiful thing about swing trade setups is that we don't really care. If we find a company that doesn't make sense, that we're not happy with the results, we just check another company. We've created a potential list of 12 different companies in a few seconds. And for any companies we do like, for example, let's go back to that first one we looked at, AEE. We liked the 4-hour, right? So what we can do is go to our indicator and add an alert for it. Interval, make sure we set this to 4 hours. And then we would get notified when that happened. So now if we click on the bell icon on the right, RSI, STC, go long. We can see that it's still active, meaning it hasn't happened yet. Now we can check another company. We go in, we keep checking companies. Let's just pretend we liked SPY. We can go in here and let's go 1 day bars. Okay. Add an alert, interval, 1 day, create. Now we have 2 different alerts. One for SPY using 1 day bars, one for AEE using 4-hour bars. We can customize and create an entire list of alerts using all of these different periods and intervals that meet our needs. And we can repeat this every day if we wanted to, or whenever we have a little bit of time. Create your watch list over the weekend. Go in and do this process. Let's say you don't like the utility sector, or there's not enough there, or you're going off of vibes. You know what? You like technology companies. Cool. Plug in technology, 5 companies for us to look at, see which ones might make sense for the strategy. Let's see Dell. 2025 performance hasn't been all that great for 1 day. For 4 hours, oh boy, I like that. Okay. Trade analysis. How often would I be trading? 1.5 days on average. If that's too much, if you don't want to trade and hold 1.5 days, then you might want to use 1 day bars and look at a different company that meets those 1 day bars better. For example, SPY. We go back to look at SPY. Its 4-hour bars aren't that great. 1 day bars are. In trade analysis here, the average hold for SPY is 3 days. So that is one setup. And to be honest, this is the setup that's going to give us the most options. But we can also flip it to find the companies that might give us the most room for opportunity. So we can flip that and we can do a strategy where we look at the top sector still, because we're always going long. We might choose the utility sector. Here, though, I want the price to be going down. Why? Because when the price is going down, there's a higher chance that the RSI is going to be below 10. That's what we want. But I still want it to be on a breakout, because I still want it to be trending positive over time. But instead of potential breakouts, I want potential breakdowns. The reason is that this is going to show me companies that are getting close to the point that they're most likely to turn back around and go up. I want to be there. I want to be in the room where that happens. But we only have one company, SPH. So we can go back, plug in SPH, see what we think. Try it. Not great on the 1 day bars. Decent on the 4-hour bar. Trade analysis. How long is it holding? On average, 4-hour periods or 2 days. Gene is saying ORA. Let's check it out. ORA. Not great on the 4-hour. On the 1 day. It was negative for a while, but its last couple of trades have been pretty successful. Again, this is where past results don't guarantee future performance, and it swings in the opposite direction. It could mean that we care more about the more recent trades because we're investing today, not in 2024. This one is holding on average 3 days. Can this strategy be used with more than just the swing trade setups tool? Yes. But the beautiful thing is, they go hand in hand. This is a strategy that can be done with swing trading. Typically, personally, 4-hour or 1 day bars are the most interesting. Means we're holding a day and a half to 2 days. We're not as worried about day trading limits. Or you can plug in companies you might be familiar with or interested in. however you find the companies that you personally feel and you have data to back up that it's going up, the better off we'll be. Now, I'm showing off quite a few indicators here, and many of you probably don't have access to these two indicators. If you were part of Analysis Academy, you will, but if you weren't, I want to make sure that we can get that access to you. These indicators are private, meaning you can't just load it up with TradingView. So to get access to them, you must be an active Sectors Made Simple subscriber. If you don't have a subscription, you can head on over to sectorsmadesimple.com and purchase either a monthly or annual subscription. Or if you have purchased or wish to purchase Analysis Academy, that includes access to these two indicators and all of the other indicators we cover in that series. In either case, if you need access and you have a subscription or the classes, send me an email at support@sectorsmadesimple.com and send me your TradingView username, not your email. Your username is, for my example, Sectors Made Simple. Please don't send me your email. I don't need to know your email. I don't need to know anything crazy. Just whatever your username is for TradingView. Now, I want to answer one final question. Can I use the same strategy for day trading and for options? Yes. Yes, you can. Usually, you're probably not going to use 4-hour bars. You might use 5-minute or 15-minute bars. But if we're going to do that, we need to do a little bit more research. Yes, RSI and STC are fractal, meaning it will work with any duration of bar. 5-minute, 5-second, 1 day, 4-hour. How well it works, your results may vary. But if we buy stocks with shorter bars, meaning if we bought stocks with 5-minute bars, well, let me show you. Let's go back to SPY. And if we used 1-day bars, we would see that our average, trade analysis, our average winning trade was 1%, 1.3%. We went to 1-hour bars, now 0.5%. If we went to 5-minute bars, it's 0.14%. I don't know about you. I'm not going to get out of bed and caffeinate myself and sit in front of a computer for 0.14% return. That's a sneeze in the market. But if we're interested in options, that 0.14% could be 40 to 50% in an option. And with this, you're holding on average 4 bars. That's 4 5-minute periods. 20 minutes in and out adventure. For 20, 30% profit, but also risk. So, can this work with options? Yes, especially if we want to use shorter bars. And really, Analysis Academy was all about day trading. It was all about looking at options. But personally, if we're going to use anything that is shorter or where we're buying and selling in the same day, options are going to be the better choice, not so much buying and holding the stock itself. The other thing to consider is that buying and selling in the same day can not get us into trouble, but can get us into a situation that we get flagged as a day trader. That's not a problem. There's no penalty for that, but it does add some extra things that we need to think about. So if we want to avoid that, we should limit how many day trades we're making. If we do get flagged as a day trader, not a huge problem. We just now are considered a day trader and have to follow day trader rules. So, yes, can you day trade them? You can. But if you want to look at options and follow everything we learned today, I will add one extra thing. Please make sure there's actually options for what you're looking at. For example, let's take the stock SPH, for example. If we go in here and we look at Finance Yahoo. This is just the one I like to use for looking at an options chain. And we looked at, what was it? Sorry. It was SPH. We go down here to options. There were 40 options traded with a strike price of $17.50. 5 traded for 20. But the last time they were traded was September 19th and September 11th. Personally, I'm not considering options for this. But if I was looking at something like SPY, we can go to options and look at close or at the money options. And what we get is sent back to the home page. There we go. If we go to at the money options, which will be where the blue turns to white, 300,000, 236,000. That's a little bit better. So if you are considering trading with RSI and STC for options, please make sure whatever underlying security you're looking at has enough volume and trades so that when you want to go and buy, there are people selling, and when you go and want to sell, there's people buying. So that's what I wanted to cover today. I want to answer one question really quick and any other questions you might have, and then we'll wrap things up for today. Anna's asking, can this setup only be used for longs, or does it also work for shorts? Great question. It works for both. I will quickly explain how you would do it on the other side. What you would do is if we opened up the combined plot, instead of having your on your marks point be when the RSI goes below 10% and the go would be when it turns green, you'd use the opposite signals. So when the RSI goes above 90 is the on your mark, and then the go would be when the RSI turns red. Great question. So that's what I wanted to cover with you all today. Swing trade setups is an amazing tool on its own, especially if you already know what you want to do once you find a company you're interested in. But it can also be used in addition to other technical analysis strategies with a platform like TradingView, and RSI and STC is a great entry point for those strategies. So again, if you are an SMS subscriber and you want access to the 2 indicators I showed today, please send me an email at support@sectorsmadesimple.com. If you are not currently a subscriber, we do have a promotion that is ending today where you can save 15% on a subscription with the coupon code SEP15. So this is the best opportunity to join us, get access to all of our tools, and yes, the strategies and indicators we cover today as well. If you have any other questions, please feel free to shoot me an email. It's always a pleasure to chat with you all and help you to learn how investing can be made simpler with Sectors Made Simple. Thank you all so much. I hope to see you all back very soon.